Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with a 5 o'clock shadow and with the NMLS number 2028-201. He is a gentleman. He is a scholar. He is
Tyler Crawley.
Well, I am back behind the mic, back in Wilmington. Fun trip to Virginia Beach. I was there for 27 hours. I did the math. 27 hours. 2 planes there, 2 planes back. It was a whirlwind 2 days, but I'm glad to be back in Wilmington. And, well, you probably figured it out. This is Wilmington Mortgage. I am the aforementioned host of this podcast, Tyler Crawley, loan officer, Town Bank Mortgage, right here in Wilmington, North Carolina. And we break down the top stories impacting rates every weekday when I can get around to it. That's sort of our goal, and we try and do it in 15 minutes or less. Not a lot going on. Wasn't as exciting as last week. But we do have we got some Fed minutes. We'll talk about that. And then some trade news, so we'll get into that as well. And then tomorrow's the big day. Tomorrow is inflation data. Oh, no, I'm sorry. What is it? Actually, what is tomorrow? See, there's a lot going on. When you come back from a trip, there's like a lot going on. I'm doing a lot today. So let me see what we have. Oh, no, right. We got GDP, and PCE. So, yeah, I was right. Inflation data and GDP numbers. So a lot more exciting what's going to be happening on Friday. Real quick, though, I want to talk about this because the news isn't that impactful. But so we had a big sales rally in Virginia Beach where Town Bank is headquartered out of. And so we all went up there, people from all over. I think as far north as Pennsylvania. I think you had people from Alabama. It was, it was a good trip. Good to see colleagues and everything like that. It was really fun. But a lot of speakers. And remember one of the speakers was talking about, sort of like the key to success and everything else was, showing gratitude. And I'll tell you this, I was coming back. So I flew into Charlotte. So it was in Virginia Beach. We flew out of Virginia Beach into Charlotte and then to Wilmington. And like I said, vice versa when I was leaving. I went to from here, Charlotte, Norfolk. And I'll tell you something. I know a lot of people complain about flying. And yeah, I mean, some of the people on the planes. I think I've always, unless the one time I was going to the Cayman Islands, to the islands. So I think I had a short sleeve shirt on. But usually when I fly, I make sure I have pants on and a sport coat. I don't wear a tie. I say that for the podcast. But so whatever. I know people dress like whatever. I don't really care about that. Do whatever you want, right? I like freedom. Do whatever you want. So, but there are people, I think dressing better makes you act better, but whatever. That's neither here nor there. But what was amazing to me. So first there's 2 things that happened. So one, I was on one of the flights and I had a 3-hour layover in Charlotte. And so we landed and I was thinking, the stewardess gets on the loudspeaker and says, hey, there's some people who have a very, very short time frame to get to their next flight. Like their layover is not very long at all. And we would appreciate it if you have a longer layover, like an hour or more, to let them get up and go. And I was like, all right, I'm going to do that, but no one else is going to do that. And I would say almost the entire plane did that. Everyone ran off and we all kind of looked at each other and said, well, I got a longer layover. And so that was amazing. So I said, that's great. I went into it thinking no one's going to do this. Everyone, because usually on planes, the plane lands, everyone stands up and tries to knock you over to get out and doesn't follow basic instructions of letting the rows, earlier go and then working their way back. I said, they did it. So my faith in humanity was restored. But the other thing was just so amazing. I was just walking around the airport. I had a 3-hour layover and it was just watching all the different places that planes were going. People were flying from all over and it all just like works. And yeah, you get delays every once in a while and something happens and I get that. And you always hear about the horror stories about a plane getting stuck on the tarmac or whatever it is. But I was like, you know what? This is amazing. Like I was looking, one plane was going to Canada, and I said, I've never been to Canada. It's kind of fun to jump on that plane and go to Canada. But I was like, how cool is it that that's an option? Like, that was not an option 100 years ago. I don't care how much money you had no option of flying to Canada. And I just thought, that's just, it's become so commonplace. You don't realize how amazing flight is. I don't know. It's just, I was like thinking about it, like having gratitude. And I was thinking, man, it is so cool. And it was funny. I think I looked it up. There's like 20,000 airports in the United States. And I chose like another country kind of at random. And I was like, what about England? And they said England had like 50 airports. Like the whole country has like 50 airports. And we have 20,000. I think, and mind you, those numbers might not be correct. I think it was going off AI. But I just wanted to point that out. Like, I don't fly a lot. It's the first time I think I've flown since I went to Cayman. And that was the end of 24. But it's cool. Like, you forget how cool it is that you can just get on a plane and go somewhere and be in an entirely different place, a couple hours away, that back in the day would have taken months to get to. I don't know. I thought it was cool. I just wanted to point out, capitalism rocks, baby. Like the gift of flight and what we've done to make flight so accessible to so many people. Because I love when people are always like, back in the day, traveling was so much better. The seats were bigger. And I was like, yeah, but it cost like $10,000 to go anywhere in today's money. And now you can like get on a plane and go somewhere for like $98. Some of these deals I see. So, all right, let's move on. Let's get into what you're actually here to talk about, which is what's going on in the mortgage world. Now that was longer than I thought. I only got a little bit of time left now. All right, so we had Fed minutes that came out. That was from the last meeting. And I told you on the last show, I said, well, unless there's something really crazy in there, nothing's really going to happen. And the takeaway from what I read from the participants, because you have the voting members, I think I can't remember what they're called, but you have like staff, and then you have like participants, and then there's another category for the actual voting members. I can't remember what they are. It might be members, like the ones that are actually part of the FOMC, because you have Fed people who are not part of the FOMC, so they're not voting. But basically, here was the gist. Everyone seems pretty happy with the economy. I mean, there's uncertainty involved. They don't know what's going to happen with inflation. They're confident it's going to fall, but they don't know if it's going to happen or when that's going to happen, when we're going to get back down to that 2% rate. They feel like the labor market is starting to show signs of strength, where there was concern about, these bad jobs reports. We got a good jobs report in January. So it was like, well, they're seeing signs of, it's still a low fire environment, but there's less firing that's going on and layoffs. And so that's sort of the good thing. So they're feeling pretty good about the labor market. There's no real concern there. They're feeling good about inflation. They're feeling good about the overall economy, consumer spending, and all of that. But they're not sold on that. And so therefore they feel like they are in that neutral rate area. It might be leaning towards the higher end, but they're not saying they're at the higher end. And so basically, in order for there to be another Fed cut, we are going to need to see either inflation falling or problems in the labor market. And we're not seeing that. And so because of that, a rate cut does seem like it could be further away than maybe some were hoping. And that's why we saw the 10-year jump about 3 basis points. Nothing big, not a big move. Today, we haven't really seen any movement. All we really got was some trade deficit data, and pending home sales weren't the best. But nothing crazy. But like I said, if you're a little more optimistic about a rate cut, then this is not welcome news. And I think that's why you saw a little bit of a dip in the 10-year with regards to yield. Saw yields rise a little bit because, like I said, I mean, they were thinking, ooh, we might get a rate cut. But here's the other thing. And this is, I got to keep reminding people of this because I'll talk to people and they'll be like, well, we just need a new Fed chair. I understand like the Fed chair, runs things. It's like the Chief Justice of the Supreme Court. They make very big decisions and can persuade other members. But at the end of the day, they're just one vote. And the important takeaway from these minutes is that everybody on the board feels very similar to Jerome Powell. And so everyone that thinks like Jerome Powell's like puppeteering, right? That was the term, puppeteering. The rest of the board, it's not true. I mean, they are coming to these conclusions that happen to be the same that Jerome Powell has. But they're also not on board. So like if let's say we got the most hawkish Fed chair in the history of the world. And he's like, I want 50 basis point cut. It wouldn't happen because it would just be one vote. Probably two. Stephen Mirren would be like, I want to cut too. But the rest of the board's like, no, we're not going to do that. And so I want to remind everyone that when we get this new Fed chair, it's not going to be the revolution that everyone thinks it is. It's one vote. So just a reminder. There's not going to see like, oh man, all of a sudden we're going to see like a full point cut. It's very unlikely to happen. All right, we did get some trade data. Trade data does matter because a little refresher course on trade. So we have what's called the balance of payments, and just to make it simple, for every dollar that leaves the United States, there's a dollar that comes into the United States. That's basically what it is. That's why it's called the balance of payments. So every dollar that goes out comes back in. Every dollar that comes in goes back out. It's completely balanced. And so when you run, and the reason I bring this up is that when you run a trade deficit, that's, we have goods that are going out of the country. So the money's going out, right? Because people are buying, we're using dollars to buy their products. So we're like, here's a dollar, give me some wood. So here's a dollar, give me some wood. So those dollars are all leaving. They all come right back into the country through what they call foreign direct investment, FDI. And that's important because one of the questions that many people have had, me especially, is that we rely on a lot of foreign investment in treasuries. And we like that because we don't want, because there's a massive amount of treasuries being issued with the massive amount of debt that we have in the United States. And so if all of a sudden, we're not issuing less debt, by the way. If you remember, our budget deficit was pretty much the same it's been for the last couple of years, over about $2 trillion. If all of a sudden those foreign investors aren't buying, who's going to be buying? We need domestic buyers. And the reason why we don't like domestic buyers is because when people buy treasuries, that means they're not doing something else. They're not investing in the stock market. They're not investing in a startup. They're not maybe investing in their own company. And so that money, we like it when foreigners do it because then our money that's already in our economy stays with now some of the money goes overseas and stuff like that. But we like it when foreigners sell us cheap stuff and then turn around and use that money to buy treasuries or invest in the stock market or whatever. And so the question I've never heard anyone explain is that, okay, well, if we lower the trade deficit, Americans are going to have to make up that difference with regards to treasury purchases and need to sort of prepare for that. So that's why I'm bringing this up, because trade balances can impact treasury yields. Because all of a sudden, if we see a lot of foreign investment go away and we don't see a pickup in domestic demand, then what's going to happen is yields are going to rise. So what happened to close out 2025 was the trade deficit jumped back up to over $70 billion. It had fallen to a 16-year low around November? It was like $28 billion, like the lowest number we'd seen in 16 years. Now after 2 more months, it's jumped all the way back up to $70 billion. We ended the year 2025 with a $901 trade deficit, which was just 0.2% below 2024, which is pretty crazy because all these tariffs and everything that were going on, you would have thought we would have seen a substantial reduction in the trade deficit. It just didn't happen. And in fact, we're only 2.4%, the all-time high that we saw in 2022. And like I said, that's kind of weird because of all these tariffs that were put, it's like it didn't really impact trade. And there's a lot of reasons for that. We're out of time. Don't have time to get into it, but I'm one of the believers that the reason why we have a trade imbalance is because of the trade deficit. We have a trade deficit because we're running a budget deficit in Washington. That's my take. I've talked about it before. But basically it has to do with the foreign investment and that, once again, we're relying on foreigners to buy our debt, which we're creating because of the budget deficit that we have. And so if you want to really balance trade, stop selling so many treasuries. It's basically stop issuing so much debt because Americans are only going to buy so much. There's an appetite for them. They buy them. We're the largest holder of our own debt. We get that, but there's only so much of an appetite. And so then the foreigners then pick up that extra debt that we have. And if we lose them, then we have to pick it up. And will that happen? If not, bond yields are going to soar. But all right, that's it. Rates aren't up that much, about maybe 4 basis points for the week. So mortgage rates still look pretty darn good. 10-year rate still looks pretty darn good. I've gone over my 15 minutes. The first day back, I had a long airport story. You got to give me a break. I felt necessary to do that. But yeah, that's it. We're done. I'll see you back here Monday for another edition. I really should do a show tomorrow, but we'll talk about it on Monday. Maybe I'll do a Sunday show. There's just so much news happening tomorrow. Should talk about it. So we'll see. We'll see what happens here. But you guys enjoy the rest of your Thursday. I'll talk to you maybe before, but if not, Monday. And until then, remember, as always, do not wait to buy real estate. You buy real estate and wait.